Usually when we talk about the titans of social media, we have a pretty specific mental image. We think of scrolling news feeds and status updates or algorithms feeding us outrage.
Right, the classic town square model.
Exactly, like arguing with a stranger in a comment section at 2 in the morning. It's a very text-heavy, feed-heavy world.
It is.
But then you pick up a financial report from Snapping, the parent company of Snapchat, and the very first thing they do is kind of gaslight you a little bit.
Oh, yeah, they absolutely do.
They don't say, we're a social media app. They state explicitly and boldly, Snap Inc. is a camera company.
It definitely creates a bit of cognitive dissonance right off the bat. I mean, you're holding a phone looking at an app icon, but they're telling you they are in the business of cameras.
It really does. And they claim that the camera represents the greatest opportunity to improve how people live and communicate. And today, on this deep dive, we're going to test that claim.
Sounds good.
We're taking a serious look at Snap Inc.'s Form 10-K for the fiscal year ended December 31st, 2025.
And since today is February 20th, 2026, we really have the benefit of looking back at what was clearly a pivotal transitionary year for them.
Yeah, a massive year.
This report is fascinating because it paints a picture of a company with a massive user base. I mean, 474 million daily users, generating nearly $6 billion in revenue, yet they are still wrestling with the fundamental question of profitability.
That is the big mystery we need to solve today for everyone listening. How does a free app make billions, still lose hundreds of millions, and decide that the solution to all their problems is augmented reality glasses and a specialized operating system?
It's a high-stakes bet. Snap is in a delicate transition period right now. They're narrowing their losses, which we will get into, but they are doing it while facing this onslaught of competition and regulatory pressure that is, frankly, relentless.
Okay, let's unpack this. We have to start with the product itself because the report breaks down the app in a way I hadn't really thought about before.
Yeah.
It isn't just one thing. They describe it as 5 distinct platforms.
Right. This is crucial for understanding their entire business model. It's what they call the 5 tabs strategy.
The 5 tabs?
Yeah. You have the camera, visual messaging, Snap Map, stories, and Spotlight.
And the camera is the king here. It's like the sun in their solar system.
The camera is the entry point. Think about how most apps work. You open Instagram or TikTok, and what do you see?
Content.
Exactly. You see other people. When you open Snapchat, you see your own face or whatever's right in front of you. The philosophy they outline in the 10K is that images contain more context than text.
Which makes total sense. Like a photo of where I am says way more than a text just saying I'm at the beach. It captures the vibe, the weather, the lighting.
Exactly. And by opening to the camera, they are prompting creation immediately, not consumption. It changes the user's psychological state. You are judging other people's lives. You are documenting your own.
And they emphasize this feature that I think defines the whole vibe of the app, which is deleted by default.
That is the psychological hook. By mimicking real-life conversation where words disappear after you say them, they reduce the pressure to be perfect.
It's kind of the anti-Instagram in that way.
It really is. You aren't curating a permanent gallery for a museum. You are just talking. It lowers the barrier to sharing.
But here is the problem. Talking doesn't necessarily pay the bills, and this is where the report shows a major shift. They are realizing they can't just rely on selling ads against those chats. They're pushing hard into subscriptions.
This is the diversification play. Relying solely on advertising is volatile, so they've introduced tiers to try and get that recurring revenue. You have Snapchat Plus, which gives you exclusive features like custom icons, that sort of thing.
Right.
Then you have Lens Plus, which focuses specifically on those AR experiences.
And now Snapchat Platinum, which is the ad-free experience.
Right. That is the holy grail for a lot of users. If you use the app all day, paying to remove the ads becomes a really viable option. But the most ambitious part of their Beyond the App strategy isn't software at all. It's physical hardware.
Which is wild.
Well, if you tell the SEC you are a camera company, eventually you have to actually build a camera.
And they are. The report talks about the next generation of spectacles targeting a 2026 release.
These aren't just sunglasses with a camera, though. These are powered by Snap OS. They are wearable AR glasses designed to be hands-free and voice-activated. The whole goal is to overlay computing on the real world. They want to take the screen out of your hand and put it on your face.
But hardware is incredibly hard, right?
Yeah.
The report actually highlights a stumble here. They had to mention the Pixie drone.
Yeah, that is a cautionary tale included right in the risk factors section. The Pixie was this small, friendly yellow drone they launched to take selfies from the air. but they had to issue a voluntary recall in early 2024.
Why? Did it just fly away?
Worse, the batteries were overheating.
Oh, wow.
It perfectly illustrates the massive risk difference between shipping software code and shipping physical goods. If your code crashes, you push an update to the server and it's fixed in 10 minutes. If a battery overheats in a physical product, you have a massive logistical nightmare, a recall, and a huge financial hit.
Speaking of financial hits, let's talk money. We mentioned the revenue earlier. For 2025, they hit $5.9 billion. That is up 11% from 2024. That sounds pretty good. Double-digit growth in a mature market.
It is good growth objectively, but context is everything. Even with that $5.9 billion coming in the front door, they posted a net loss of $460.5 million.
Nearly $500 million in the hole.
It sounds bad, and it is a loss, but if you look at the trend line, it's actually an improvement. In 2024, that loss was nearly $700 million. So they are shaving down that loss. They're getting closer to being even, but they aren't quite there yet.
Is the actual business of showing ads profitable, though? Or is everything just losing money?
The core business is working. If you look at adjusted EBITDA, which is a measure of operational profitability before we get into the complex accounting of taxes and interest and stock-based compensation, it is positive at $689.5 million.
Okay, so it does make money.
The machine generates cash, yes. But the cost of building the future, the R&D for those AR glasses, the massive server bills, the legal defense, is eating all that profit and then some.
Let's talk about the fuel for that machine, the users.
Yeah.
You mentioned 474 million daily active users earlier. That is a massive population.
It's huge. To put that in perspective, that is significantly larger than the entire population of the United States. But here is where it gets really interesting if you dig into the geography in the report. The growth is slowing down in North America.
Which makes sense, right? Almost everyone who wants Snapchat in the U.S. probably already has it.
Exactly. It's a saturated, mature market. The rapid growth is coming from what they categorize as rest of world. But here's the so what for you listening. A user in North America is worth significantly more in revenue than a user in a developing market.
Because advertisers pay more to reach American consumers who have more disposable income.
Precisely. So adding 10 million users in India or Brazil looks fantastic on the user growth chart, but it doesn't move the revenue needle nearly as much as adding users in the US or Europe. They have an ARPU, an average revenue per user gap that they have to manage.
They're adding expensive users.
Yes, people who cost money to serve data to who aren't yet generating high ad revenue.
And that revenue is still overwhelmingly coming from one place. 87% of their money comes from advertising.
And that is a major vulnerability. The report is very clear about this. They rely on direct response and brand advertising.
Explain the difference there for us.
Brand advertising is like a Coke billboard. It's just, hey, remember us, it builds awareness. Direct response is click this link to buy these shoes right now. The problem is when advertisers struggle, maybe due to inflation or supply chain issues or even geopolitical conflict, marketing budgets are often the first thing to get cut.
Right.
When the global economy sneezes, Snap catches a cold.
There is also the issue of where they live. They don't own the land their house is built on. They live on iOS and Android.
The rented land risk. This is a recurring theme in their 10K. They are entirely at the mercy of Apple and Google. We saw this play out with Apple's privacy changes back in iOS 18 in late 2024.
That made it harder for apps to track what users do right.
Correct. It caused what the industry calls signal loss. If Snap can't tell an advertiser, hey, this person saw your ad and then bought the shoes, that ad space becomes a lot less valuable.
Because the advertisers don't know if the ad actually worked.
Right. Apple made it much harder to prove that connection. And the report explicitly mentions the risk that Google could do the exact same thing with Android.
And it's not just about tracking. Apple has iMessage,
which is a direct competitor to Snap's messaging features. And since Apple owns the iPhone, iMessage doesn't face the same restrictions or hurdles that Snapchat does. It comes pre-installed, it's seamlessly integrated, it's an uneven playing field, and Snap has to just live with it because they can't leave the iPhone.
Okay, shifting gears a bit. I want to talk about who is actually driving this bus. Because when you look at the corporate governance section of the 10K, it is, well, it's unique.
Unique is a very polite way to put it. You could call it a benevolent dictatorship.
Here is where it gets really interesting. The co-founders, Evan Spiegel and Robert Murphy, control over 99% of the voting power.
99%. That is staggering. Snap has 3 classes of stock. Class A, which is what you or I would buy on the public stock market, has 0 voting rights. None.
Wait, so if I buy stock in Snap, I literally have no say.
You are buying a ticket to the ride, but you cannot steer the bus, you cannot touch the brakes, and you certainly can't fire the driver, even if the bus is heading toward a cliff.
So if investors don't like the direction, say they think spending millions on AR glasses is a terrible idea, they can't do anything about it.
Their only option is to sell the stock and walk away. The report even details that if one of the founders passes away, their power largely transfers to the other. It ensures that the founder's vision remains the priority regardless of what Wall Street thinks.
That vision is facing some serious headwinds from the government, though. The legal proceedings section of this report is a bit of a minefield.
It is extensive. You have the issue of youth safety, which is huge.
Right.
The FTC actually referred a complaint to the DOJ regarding my AI Snaps chatbot and the risks it poses to young users.
What happened with that?
Well, the DOJ didn't act within the statutory period, so the case went back to the FTC, but that cloud is still hanging there. The government is watching how AI interacts with minors very closely.
And then there are the fentanyl lawsuits.
Mm-hmm.
This part of the report was heavy.
It's a tragedy and a massive legal nightmare. There are public nuisance claims and lawsuits alleging that drug dealers use the platform to sell fentanyl-laced pills to minors, leading to fatal overdoses.
That's awful.
The legal argument is fundamentally about the platform's design, specifically the disappearing messages we talked about earlier. Plaintiffs argue that because the evidence vanishes, it facilitates illegal activity.
It seems like technology is moving way faster than the law can keep up.
That is always the tension. And speaking of which, AI liability is all over this report. It's the new frontier of legal risk.
Like what specifically?
Deepfakes copyright infringement in AI training. The report mentions the unpredictability of generative AI outputs. If my AI tells a user something harmful or gives bad medical advice or says something defamatory about a public figure, is Snap liable?
That's a great question.
It's a multi-million-dollar question that hasn't been fully answered by the courts yet.
I also noticed a very strange name in the regulations section. We usually hear about the Inflation Reduction Act, but there is something called the One Big Beautiful Bill Act. Is that real?
I know it sounds like a joke from a sitcom, but it is real legislation enacted in 2025. Along with the Inflation Reduction Act from 2022, these tax laws have completely changed how companies capitalize research and development expenses.
So what does that actually mean for Snap's bank account?
Basically, it potentially increases their tax liabilities. In the old days, if you spent $100 million on R&D, you could write that off immediately. Now you have to spread that deduction out over several years. For a tech company that invests heavily in innovation, like Snap does with AR, that is a big cash flow hit. It makes innovation more expensive from a tax perspective.
Let's talk about the plumbing of the company. We said they are a camera company, but they are obviously also an internet company.
Mm-hmm.
But they don't own their own data centers.
No, and this is a critical vulnerability. They rely almost entirely on Google Cloud and Amazon Web Services, AWS.
Wait a minute. So two of their biggest competitors in the digital advertising space, Google and Amazon, are also their landlords.
Exactly. They are paying their competitors just to exist. And the report notes that they are not fully redundant between the two providers.
What does that mean, not fully redundant?
It means they can't just magically flip a switch and move everything from Google to Amazon if Google goes down. If Google Cloud has an outage, Snap has an outage. But the bigger risk is economic. If Amazon decides to change the pricing structure or limit access to favor their own competing products, Snap is in serious trouble. They are building their castle on someone else's cloud.
And that cloud bill must be getting bigger because they are pivoting so hard into AI right now.
The AI pivot is the double-edged sword of this year's report. They integrated My AI, and then in December 2025, they integrated Perplexity's conversational AI.
Which is great for engagement, right? People love chatting with bots. It keeps them in the app longer.
It drives engagement, sure, but AI is incredibly computationally expensive. Every single time a user asks My AI a question, it requires massive processing power, which costs Snap money that they have to pay to Google or Amazon.
So a standard text message costs them almost nothing to route, but an AI response costs actual cents.
Exactly. So they have this incredible tension. They need AI to keep users interested and to compete with TikTok and Meta. But using AI increases their infrastructure costs significantly. They are running faster just to stay in the exact same place.
So to recap all of this, we have a massive entity with nearly 500 million daily users. They are generating almost $6 billion but still losing money. They are pivoting from being just a social app to a camera company with AR glasses on the horizon.
Yep.
And they were doing all this while fighting regulators paying rent to their competitors for server space and navigating a digital ad market that is getting way harder to track.
That is the summary. It is a company right in the middle of a high-wire act.
It really feels that way. So what does this all mean for the future? What is the final takeaway here for you listening as we look at Snap in 2026 and beyond?
If we connect all of this to the bigger picture, it really comes down to time horizons. The report states clearly that Snap prioritizes long-term user engagement over short-term financial results.
And because the founders have that 99% voting power, they can actually enforce that.
Exactly. Because Evan Spiegel and Robert Murphy hold the keys, they can force the market to wait for their vision to play out. They can completely ignore the short-term pressure to squeeze every dime out of users today. They're playing a decade-long game.
Oh.
But the laws of physics and finance still apply. With a $460 million net loss and 87% of their revenue tied to a volatile ad market, the real question I'd leave you with is how long is their runway? Can they fund these expensive hardware dreams, the spectacles and the Snap OS, long enough for the consumer market to actually catch up?
They need the world one AR glasses before they run out of cash.
They are betting that the future is augmented reality, not just screens in our hands. It's a very bold bet, but the market might lose patience, or the regulatory walls might close in long before the technology is actually ready for prime time.
It's definitely a story we will be watching closely. Because whether they are a social media company or a camera company, they're certainly never boring. That is all for this deep dive into Snap Inc.'s 2025 report. If you want to see the numbers for yourself, check the show notes for the full source analysis. Thanks for listening.